Welcome back. Now, Northam Platinum has faced challenges in the past financial year, with a 14.4% drop in annual profit driven by a surge in mining costs. Now, joining me to break down the numbers even further and to chat about what's next for the company is Northam Plat's CEO, Paul Dunne. Paul, thanks so much for your time today. Now, as we get started, perhaps just characterize the year that was for Northam. We saw revenue ticking higher, but that not filtering through to the bottom line. Is this just a result of, those tough market conditions?
Yeah, it has been a tough market on the revenue side with respect to metal prices. I think that's well documented. But we must also remember on the cost side, Northam is in a 5-year wage agreement period, and average wages this year came in at about, on average, about 6.5%. The real big one that we face as the mining industry is the cost of power. On a like-for-like basis, we've experienced north of 15% increase per kilowatt hour in our tariff from Eskom. We are an energy-intensive power user, and those sort of increases really are pressurizing the whole industry, including ourselves.
And I can imagine how difficult it is to manage those costs. Just walk me through perhaps some of those cost efficiency measures within this environment.
Well, we're certainly not going to pay our people less. So let's make that very, very clear. Mining is a tough endeavor, and our people are very important. At the end of the day, the money is made underground, and these jobs need to be rewarded. And we think 6.5% was appropriate, just bearing in mind that it was a 5-year historical agreement. However, on the power side, we can do something, and we are doing something. We did present earlier. We have a very strong renewable program, which is on the go at the moment. An 80 megawatt PV plant at Zondereinde near Northam. A wind project, 140 kilowatts south of Sutherland, which will be wheeled across the grid. And a further 60 megawatts of, these are all in megawatts, sorry, of wheeled power also, which will all be commissioned by 2027. The upshot of it is that renewable program, on the one hand, will reduce our carbon intensity by 60% for the group as a whole, but also reduce our electricity bill by 750 million rand per annum, ongoing in perpetuity.
And talk to me about operationally how the business has been doing. It seems to have fared well. I mean, we even saw PGM sales volumes exceeding the 1 million ounce mark for the first time.
Yeah, we had record production and record sales. However, as you say, in the face of a very, very tough market. So operationally, I would say we are satisfied, in particular the two main producers, Booysendal and Zondereinde, but we still have heavy lifting to do at Eland, and we did point that out in the presentation.
And you touched on those renewable energy projects, and I can imagine that some of the capex is going towards that. I mean, mining, yes, being power intensive, but also needs a lot of money to, run these mines. Talk to me about, those capex projects where you're looking to spend money moving forward, even with, those debt levels at where they are.
Yeah, I mean, this year we spent 4.9 billion rand on project work, predominantly at Eland and 3 Shaft, our new project at Zondereinde. And the year coming, those projects will be continuing. In other words, we committed. We have seen a better price environment in recent months, and that gives us the confidence to continue to deliver those 2 mining projects. And next year, we will spend 5.2 billion rand, predominantly on that project work, but as you say, allowing for the renewable program, which we will also endeavor to accelerate as far as possible to relieve that energy bill.
And you mentioned that we are in a cycle where prices are recovering, particularly when it comes to platinum. But just reading some of the commentary from the results, Paul, you were slightly cautious when it comes to the PGM market. What's fueling the caution?
It's really about geopolitics and the interest rate cycle and economic performance across the world. We are very attuned. The car industry, the automotive industry, is very closely linked to world GDP growth.
Yes.
So the better the world does, the better we will do, in a nutshell. And there are still, some high degree of uncertainty on certain issues. The interest rate cycle rolling over is one, very, very important for us. Also, the tariff structure and the ultimate outcome with respect to the trade structures that eventually materialize between the major countries, including not the least South Africa, by the way. So we would like to see further clarity develop on those issues.
And just quickly before I let you go, you also touched on something quite interesting in the results, that being supply concerns, with many mines being undercapitalized and having short remaining mine life. Walk me through some of the concerns on the supply side of the PGM miners.
Yeah, we phrase it in a very, in common language, you can't mine the same ground forever. These are depleting assets from day one. And you have to, as an industry, collectively replace what we mine on an ongoing basis. Since the financial crisis in round numbers 2008, 2007, where platinum output peaked in South Africa at 5.4 million ounces produced, this year as a country, we will be lucky to produce about 3.8 million ounces of platinum. So one can see the depletion has already hit the print. What we foresee at Northam is that depletion actually accelerates from here out to 2030, and it's very difficult to change that trajectory now because it does take time to build mines, and it's quite a hefty capital bill. I mean, Booysendal, as a good example, has taken us 12 years to build to full production, and a new shaft these days, vertical shafts infrastructure will cost at least 20 billion rand. So very high upfront capital, long time frames, and in mining terms, 2030 is the blink of an eye.
Yeah. All right, then let's leave it there. Thanks so much for taking us through the year that was for Northam Platinum, Paul. Well, that was Northam Platinum's CEO, Paul Dunne.